Hello, everyone. Welcome back, folks. Happy Sunday. Hope we're all doing lovely on this fine weekend. You guys could give me a quick mic and visual check that you guys can see the dollar monthly chart. Thank you very much. All right. Hello, Ahmed. Good to see you, kind sir. I'm doing just lovely. Hope you're doing good as well. Anita, Denisha, glad to have you guys. Maria, hello, at work, but it's 4 p.m., so I know where I need to be. I respect the grind. Maria. Sandman, happy Sunday. Earl Garrison, good evening. Olawale, happy Sunday. Frank, hello. Zen, hello all. Everyone finished their own pre-market analysis? Okay, now let's see how Dylan will surprise us again with his insights. I appreciate that, Zen, and that's the right way to do it, definitely. By doing your own analysis, having your own observations, expectations already written down or logged, and then using what it is that I'm sharing here as a compare and contrast, that's definitely something that would be a good use of the resource that I'm making available here. And if you have your own conviction, your own analysis, and you want to stick to that, that's absolutely fine as well. I wouldn't make it a habit of fading me too much, but it's something that, especially if you're growing towards independence, that's how you want to start weaning off, your mentor. Great stuff. High speed. Awesome. Appreciate you joining. Denisha, all good, all clear. Thank you. Nabil, thank you. Market Madness afternoon. Kingsley, can you turn up the volume? I think it's about as high up as it'll go, brother. I think it's the tech guy tells me it's got to be on yellow here on OBS, and my voice is on yellow, so that's above my pay grade, man. I don't deal with that. I think it should be good as long as you guys can hear me. I think we'll keep rolling. Frank, all good, thank you. Silk Touch Trading, hello, boss is back. Glad to see you, man. Big respect, appreciate you. Thank you, Silk Touch Trading. Crypto Queen, happy Super Bowl Sunday, everyone. Yeah, absolutely. Redeemed and restored, love your YouTube. I appreciate that. Thank you for joining. Anthony, watching the AFCON finals here in Nigeria. It's the football finals, but still active for this class insight, though. Awesome, Anthony. Glad to have you. Ahmed, proud to call you a mentor. All paying off. Glad to see it, Ahmed. I see you killing it, brother. Keep up the good work, my man. Julian, hello. All right, guys, let's go ahead and get into it. So this one, gonna look to keep it light. I know I say that pretty often, and it usually goes on longer than we even anticipate, but don't see a whole lot in today, this week. We'll cover what I'm looking for and how I'm gonna take this week on. But in terms of longer term targets and what I'm looking for on a long-term horizon, still waiting for that clarity across all markets. But again, I have quite a few insights to share with you guys here. So let me go ahead and pull up my notes. Saludos, Jose. All right. I don't even need my notes. I think we'll just roll off the cuff today. All right. So dollar 3-month chart, just going up to a ultra high time frame, just so we can get our bearings on the higher time frame. Again, a lot of people see me working off the 1 minute, 5 minute chart, and that's great, right? Understanding how to refine, manage risk on an ultra low time frame. It's great for money management purposes, but keep in mind that that's not what makes what I do high probability, right? What makes what I do high probability is trading in line with higher time frame institutional order flow and sponsorship. So in my lower time frames, when a lot of you guys see me executing on 1 5 minute charts, the real work is done on the higher time frames top down, because then that's what gives me the clarity to navigate in the lower time frames, right? Because if I was just using lower time frames, I'd be blind as to what's going on in the higher time frame, and I'm constantly referring to that higher time frame. So I just want to reiterate that point right there, because some of you guys are asking, man, 3-month chart, aren't you a scalper or intraday trader? Yes, but again, if you're trading in line with that weekly, daily, 4-hour, 1-hour chart, obviously your probabilities are going to go much higher. I saw something, I don't remember where it was at, that you don't need a higher time frame. All you need is like a 4-hour and an hourly chart. And while you can get by with that, while you don't need a daily or weekly chart and you just use an hourly, how much higher probability would your hourly or 4 hour chart be if you knew where the daily was going, right? How much higher probability would your hourly and daily charts be if you knew where that weekly candlestick was going, right? So I see a lot of ignorance all over the place. So again, find what works for you. And if you don't need that, great. Everyone makes money, different ways and has different ways to attack the markets. But there's definitely only advantage to be had by understanding the higher time frame. So 3-month chart, we saw this impulse rally last year, and then we pulled back into this range, and we've been consolidating inside this buy side imbalance, sell side inefficiency right here. So looking at this range here from high to low, we're just still consolidating at equilibrium, right? In middle of the range trading is very difficult to do, right? Especially if it's just going to consolidate. So understanding that higher time frame premise, Forex traders, as I've been saying, this year, why we're not pushing a whole lot in the Forex market. I haven't even made very many calls. I called the Euro sell side last week, which delivered nicely. But outside of just surgical take profit objectives, quick, easy to see targets, outside of that, there's not a whole lot going on in the Forex world. And I think there's a lot of things about to get shaken up with central bank digital currencies and really the changing of the financial system as we know it, right? And I think a lot of those things are reflecting in the currency markets. And that's simply because, imagine if you were a speculator with deep pockets, right? Are you going to put a bunch of risk in asset classes that have looming uncertainty that Forex may not even be a thing next year? May not be a thing in 3, 4, 5 years, right? So money managers are all weighing those things out, which is why a lot of money's leaving Forex. Not leaving Forex as in like it's dropping, but leaving Forex as in there's just not a whole lot of participation in Forex. And contrast the price action to Forex is something like index futures, right? Night and day. So jawboning a little bit around why we're seeing this, right? So you show me the chart, I'll tell you the news type of thing, right? So we're just consolidating here around equilibrium. Not a whole lot going on there on a monthly, 3-month chart. Longer term, if we stay supported inside this inefficiency, I suspect we'll want to work our way higher, and I do think we will be seeing dollar above 120. So that's something I'm looking for on a long-term projection. But again, we have to refine that to how is this going to give me value for this trading week, and we'll get into that. But that's what I'm looking at on a higher time frame, and again, just articulating and showing you guys visually why it's been difficult in the currency market, right? Why we haven't been making a whole lot of currency calls, because there's just not a lot to call out. Let's go to the monthly chart. So monthly chart, we've been watching that same range, just zoomed in now. Again, consolidating at equilibrium here. So what I gave you guys last week was we closed here at this monthly volume imbalance, denoted by the 2 blue lines, and then we got a closure above it. And then what I told you guys was the draw last week. The only thing I could see on a monthly chart within this sloppy consolidation was the sell side imbalance, buy side inefficiency, right? And I told you guys this would be the draw going into the previous week. And then that's what the market drove into. So that was the draw. Now that we've traded there, I don't know. I have to see what the market's going to want to do from here. With what I'm seeing on a lower time frame, which we'll get into, I favor higher prices, but that's not even a super, high conviction analysis I'm giving you, right? It's just a gun to my head type situation. So outside of surgical strikes, easy to see setups and currencies, I'd say it's better off being more risk averse in that asset class. But nonetheless, targets still being hit. Even in slop, we're still able to call targets. So there's that weekly fair value gap, and then reprice into that nicely last week. So what I'm going to be interested to see is how we trade there, right? Do we get into it, sell off, or do we get above it, use it as support, and keep rallying, right? Those are all things that I'm going to be watching moving forward. All right, weekly chart. Refining this further, we're trading inside this parent range here, right? From low to high. And then where are we at within now this smaller range? You guessed it, equilibrium, right? So middle of the range trading, again, difficult to do, right? Which is why we've been in consolidation, which is why you see, again, a lot of people from the month of January going into February, a lot of people are in severe drawdown and pushing in the currency market and pushing in a market that's just not going anywhere, right? You have to be able to, again, take what the market's giving you in terms of information, right? If you get stopped out several times, that's probably something that's, flashing warning signs right in front of your face, right? So it's important to be able to identify these things and know when to take your foot off the gas, right? When to get defensive. And in currencies right now, that's the play. So inside this range, consolidation, middle of the range, and then again, told you guys relative equal highs on that weekly chart, that was going to be the draw. And then above that, what I give you guys is weekly inefficiency. And then I even highlighted to you guys what levels in inefficiency do we look for? The midpoint, and then traded into that beautifully. So analysis, banking last week, again, nothing I took a trade on because there's nothing in currencies that I would put risk on. But again, still having targets hit. So buy side on a weekly chart traded into, and that weekly fair value gap. So what I'm going to be interested to see again is now, how do we trade there, right? I didn't really like to see how we hit that and anemically pulled back down into the range. I would have preferred to have seen much more aggression higher, and start moving, right? Because we need movement as traders. So this, not a very convincing close, right? So we have a little inefficiency, buy side imbalance, sell side inefficiency here below market price. So we can see how we trade there moving forward. But again, as long as we remain above this inversion fair value gap, which I did call to you guys real time, right? And this week I told you guys we'd use this as support and then rally higher, and then look at the delivery there, low to high. So as long as we remain above this, I will remain bullish on the US dollar. But again, that's not a very high conviction stance. So you're going to have to take what I'm saying with a grain of salt there. All right, let's zoom into the daily chart. Let me take this range off. So remember the two blue lines, that's just that monthly volume imbalance. So what we've been seeing here, we were consolidating and then we expanded. And then if you look at Monday's trading, Monday opened and just started expanding higher into both targets that I gave last week, right? Which is the equal highs here. And I said if we got above this high, it'd likely warrant a run into these highs here. And then delivered that run all on Monday. Tuesday back into the range, Wednesday into Friday just sideways, working inside that daily fair value gap. So what we're trading in right now is essentially a breaker here. So this last up close. And there's just a lot on the chart. I want that level on there, so I'll just make it a different color. So this green rectangle I'm drawing through, there's the bullish breaker. And look at the bodies respecting that midpoint nicely right there. So as long as we remain above this breaker here, and then above these two fair value gaps shaded in purple, I'm going to remain bullish. If we get below those levels and get through this down close, then that would be something that would have me changing my stance. But as for right now, I'm looking for higher dollar. And this is going to be further confirmed by the bond market and confirmed by COT data. So my associate here, Tommy, puts together a phenomenal newsletter every single week, and he crushes it, right? So that's something I would definitely pay attention to, because there we do cover the economic calendar, earnings reports, as well as, and when I say earnings, company earnings, right? As stock indice traders, you need to be mindful of when large caps are reporting earnings, and also COT data. So the COT data has been spot on with what we've been looking for across the dollar. So expansion higher into the buy side, and then we pulled back off that and consolidated. So what I'm going to be expecting from this range is I want to see movement, and I expect that to come by way of CPI. So I'm thinking CPI on Tuesday is going to provide a nice volatility injection and hopefully give us some displacement on the daily chart. But as for right now, I'm going to keep trusting buy models, expecting the market to go higher as long as you remain above this fair value gap here. And then we have the previous week's high as a target, the remainder of this inefficiency on the upside. And if we get animated through that inefficiency, we have the buy stops here. And then above those buy stops, we have all this inefficiency here. So again, that's just what I'm considering right now. Again, nothing to bet the farm on, but I think after CPI, we will have more clarity moving forward. All right, let's go into bonds. Let's go up to a weekly chart. All right, so weekly chart for T-bonds. Make this full screen. Took your guys' attention last week to the bullish order block last up close, and then I told you guys extend this line through, and then I took your attention to how the body stopped right there, right? So that's an algorithmic signature that tells me what? That the market is bearish, right? The wicks do the damage, but come closing time, I want to see where we close because that's going to be significant, right? So using the tools that I'm using in my trading to, again, call these markets for you guys. And then given that we respected the bearish order block here, this weekly inversion, right, which I qualified to you guys, and then stopping there on a dime on that close and then opening the following week and selling off. So T-bonds selling off. What I'm going to be looking for moving forward would be this sell side here. And then we have this weekly fair value gap here and a discount that I'd look for as a draw on liquidity moving forward. And then how we trade there is going to be influential, right? If it's going to be inversion, I want to see us trade through it, get below it, use it as resistance, and keep selling off. But again, just taking it one week, 1 day at a time. I want to see how we trade there. And then that's the target I'm going to be looking for on the downside. And just a really nice delivery here on the bond market. All right, so daily chart for bonds. So we closed Friday here, and then we did not have any of this data moving forward. So remember what I told you guys when we were at this price point here, that if we were going to work lower, right, if it's going to make its way down into the sell side here and here, which is what we've been seeing, these fair value gaps here are not going to be used as support. Right, so I told you guys we're not looking at this like fair value gap, go long, continuation, right? So you have to understand narrative. I said it'd get below it, trade up into it, use it as resistance, sell off, and that's what we've seen there. And market working below the low on Monday, and now I'd want to see more aggressive acceleration lower. And I have this labeled breakaway gap here because I don't want to see this one filled in, right? So if this fair value gap does not fill in, then that's going to confirm to me that this market's really bearish, and then I'll be able to continue trusting lower prices on bonds, which is supportive of a higher dollar, right? So that's where this comes in. So as long as we get acceleration through the sell side here and here, again, we have that weekly fair value gap, which on a daily chart, you wouldn't see the inefficiency. So that's that weekly inefficiency, and that's what I'm going to be looking for on the downside. And again, wanting to see that be a breakaway. So that's about it. Let me take a look at Forex. I haven't even looked at Forex myself, so I'm looking at it for the first time with you guys. So remember I called the sell side for you guys last week. Did it hit that? Oh, there we go. Yeah, so we did get targets hit on Euro. Lovely. But also, again, I remember I said that this balanced price range here, there's no need for us to get up above that. So that's why we just opened Monday, ran lower, right? So giving you guys the context that because this inefficiency is here, we repriced higher, lower, and left that range. Now that's a balanced price range, right? So there's no need for the market to trade back up into that. Market sells off, running further lows here. Would have preferred to have seen more acceleration through that low and run into this sell side here. But again, just have to take what the market's given us. And right now in Forex, it is atrocious. And then pound starting to move a little bit out of that range, but again, just still in a nasty little range there. So we have relative equal lows here, here, and here. So I'll suspect if they'll want to use that for CPI, but again, nothing to make a call on here, right? This market's 50-50. It could go both ways, and they could use CPI however they want to, and there's nothing one-sided high probability, right? Contrast this price action to what we were doing last year, right? Just running laps around this market, calling it higher, calling it lower, calling long-term targets weeks in advance when we could have all that visibility, right? But right now, it's very different market structure in here, right? So something to keep in mind. And let's get into yields. All right, so we'll breeze through this one. Weekly chart on yields, and the reason yields are important is because it's going to have a direct correlation to the dollar. So I took our attention last week to a key SMT that we had. So we see that 10-year did not make a lower low, 30-year did not make a lower low, but 5-year did make a lower low. So here's that SMT Kraken correlation that helps us time our reversals. So seeing that we had that Kraken correlation, and now look at the displacement higher. Look at the rejection from that low. Turtle soup, confirmed by the SMT. And then the signatures around turtle soup is that's going to aggressively reprice away from that swing point. And then we see that here. So for right now, I'm looking for higher prices on yields, which is why I'm bullish dollar, right? So when the dollar's a bit muddy, I don't have the clarity I want, we'll have to rely on some of my other tools, right? Which is COT, the yields, the T-bonds themselves. And I'm having to do more comprehensive analysis to get the clarity that I need. So as for right now, we're seeing SMT, and I'm still looking for higher yields, which is again going to push dollar higher. and we're likely going to see that risk off sentiment moving forward, which is dollar money flowing into dollar. But even as now transitioning into stock indices, even as we've seen, go back to dollar, even as we've been seeing higher dollar these past few weeks, right, which we have been calling dollar higher, right, took our attention to that weekly inversion here, saying we'd use that as support, market rallies higher. So we've been seeing what? Consecutive up close candles in dollar. And I was getting a lot of questions saying, well, you know, how's it possible that we could be bullish dollar and be bullish indices at the same time? You know, that's impossible. The markets don't work like that, right? And then remember, I told you guys that dollar is not as one-to-one as is, like, for example, euro or pound. It's going to be extremely one-to-one, right? Dollar ticks higher, euro, pound's going to tick lower. Indices, it's more nuanced than that, right? So it's not going to be that exact one-to-one. And I highlighted that to you guys weeks ago, right? Explaining how we can absolutely be bullish on both. Long-term, strength in dollar is going to make indices bend the knee, but that's long-term. Short-term, we have to trade what the market's giving us, which is, what have I been saying? Mentorship students, man, they're like, shut up, Dylan. Stop telling us to stop calling it top. We get it. But you guys, again, since you guys aren't with me every day, what have I been saying on these live streams? Again, I've been sticking to my guns, telling you guys this market's going higher, and I'm not calling a top, right? We're going to continue looking for higher prices on indices as we have been. So weekly chart, yeah, I'll cover that on the daily. So we'll stay on the weekly chart for now. So weekly fair value gap in here, market traded down into that midpoint, right? Unable to do what? Get down into the discount end. What does that tell me? That tells me the market is bullish, right? Because it's finding support at constant encroachment. It's not able to trade lower. That's a strength signature. So open, low, high, close, open, low, high, close, which is what we expect in a bullish market. So we got the open last week, drop lower, and then we expanded higher. So we have that weekly swing high. That's that buy side liquidity. And then the market ripped higher into that, but not trading to it just to sell off, trading to it and through it aggressively, right? Which tells me I do not want to call it a top. I do not want to stand in front of a freight train and try to stop that freight train, right? That's the equivalent of trying to call it top in indices that are just screaming higher. Daily chart. Gonna show you guys the fib projections. I remember weeks ago, I was telling you guys we're looking at that 1800 level on NQ. How'd you know that? I'll cover that. Hold on. Cover that for you guys here. And so again, I told you guys it's a matter of using fib projections when we're at all-time highs because there are no other data points on the left side of the chart that we can look at, right? So I was using this swing here and then using this swing here. Then you see -2, 1800, and then -1 is 17,996. So converging at we're at that 1800 level. So that's how I was able to give you guys that 1800 target. Why? Because we're seeing convergence, right, from the standard deviations at that key level. So market trade up into that nicely. And then after we hit the 1800 level, again, my crystal ball went dark, right, because I can only see so far ahead. And for any thought process or logic as to how we engage in the markets, again, across an array of thought processes, tools for calculating where the market's going to go at all-time highs are very limited. Again, and that's not just, again, within what we use as algorithmic price theory. Any school of thought out there has lots of difficulty continuously calling a market at all-time highs because there's no data points, right? What's the drawn liquidity? What do we lean on for high probability targets, right? Yes, we just want to keep trusting buy models, right? Because we're not going to call it top. But again, it makes it inherently more difficult, right? Which is why the name of the game is low risk, reduced leverage, right? We're not digging ourselves a huge hole in low probability conditions. And then again, for the average trader that has never really traded much or isn't really financially responsible, that's really hard to understand, right? Because it's just high risk, always risking. Whereas as you get better at this, you're not going to just focus on what you can make. You're going to, again, you have to start appreciating the risk side of the equation just as much as we think about the reward side. Right, so that's something very important to consider. And considering where we're at right now at all-time highs, that's, again, something else to further keep in mind. So on the upside for targets moving forward, we have 18,411, and then above 18, we'll just call it 18,500. So 18,500 is going to be that next big figure number on the upside. Do we get there? That's what I'd like to see, gun to my head type situation. But we'll have to see how we trade when we get there. So just as a recap of last week, again, we were not looking at this as any type of topping formation, right? We're looking at these equal highs here, here, and here, selling the idea of what resistance, because retail wants to call it top, right? They want to reverse it. Everyone wants to short this thing, right? And that's why they just keep running it higher. So when they had these equal highs here, well, we're not looking at this as resistance sell off, right? We're looking to bust through the door like the SWAT team, right? And then that's what they did on Wednesday. Small range day after a large range day. After a small range day, we get a large range day, and then Friday expands higher. So as of right now, again, in the present market structure, from what I'm seeing, we have a small inefficiency down here. Buy side imbalance, sell side inefficiency. As long as we remain above that fair value gap in this down close here, I'm going to remain bullish on this market. But if we start to work down through those levels, then again, that's going to be something to consider. But again, what we're seeing long term is we see bonds lower, dollar higher, and indices higher, right? Something has to give at some point, right? We can't keep seeing unsymmetrical markets deliver how they should, right? So is this a suspect rally in NQ and ES? Maybe it is, right? But look at all you would be losing out on not going long because it has to move lockstep with dollar, right? So we give that degree of flexibility to the market and just trust the underlying order flow and indices, even if we're calling dollar higher. So again, as of right now, I gave you guys some targets on the upside, but again, just taking it day by day. One of the things that I have to rely on a lot in my own trading when we're all-time highs is internal to external, right? So every time we get a retracement to internal liquidity, that's likely going to do what? Set up a run into external. And then another tool I'll give you guys here on the YouTube is whenever a market's bullish or predisposed to go higher, there's always going to be setups attacking the previous day's high. If you just study last week's trading, what did Tuesday do? Traded up into what? Monday's high. Wednesday, traded into Tuesday's high. Thursday, traded into Wednesday's high. And then Friday, traded into the previous day's high. So there's always going to be fresh setups just attacking the previous day's high, right? Because there's always somebody in a lower time frame trying to call it top, and they're going to run on them. So that's what we're looking at on NQ. Drop down into the hourly chart. So we'll refine this in the hourly chart. So as I told you guys last week, we had all these equal highs. We had all that buy side liquidity pent up here. So what I was telling you guys I wanted to see was my target was this high, right? We were looking for that liquidity. But then what I wanted to see is how we trade there, right? Do we trade anemically above it and reject? Or do we displace through it and keep ripping higher, right? And we ended up displacing through it and we just kept continuing higher. So with that, again, I'm not calling a top on this marketplace, but some things to consider. We have CPI on Tuesday, and that's typically known as a disruptor. It's really those big three news drivers that they tend to run against the underlying order flow on a daily, weekly chart, right? So what would that look like on an hourly? Well, here we have relative equal lows here and here. And there's a little bit of sell side there. So do they use that sell side as a run on Tuesday to continue higher, or do we trade through those levels, keep smashing lower into this sell side? You know, all those things are what I'm weighing out, right? But I do not want to call a top, and I'm going to keep trading for higher prices until we get into some more clarity moving forward. Another thing to consider is that Monday, because we had a large range day Friday, because Monday there's no news and we have CPI on Tuesday, I'm going to let Monday pass, right? I'm going to use Monday to get more information as to what the week is going to likely do. So that's what I'm going to be doing this week. And that's my game plan. But again, showing you guys how I'm going to be attacking the markets, and what I'm going to have to do is I'm going to be using hourly and 15-minute charts, right? Just being surgical, looking for buy side, sell side, session highs, session lows, time-based highs and lows, and scalping using hourly and 15-minute charts. Because again, there's just not a whole lot of conviction to go behind analysis when we're at all-time highs, right? So understanding that it's not the easiest trading environment. So if you guys are having difficulty yourselves, again, it's not something that is unique to you, right? We're not in the easiest conditions to begin with. So that's what I'm weighing out for NQ. We'll go into ES here just briefly. And again, higher prices on E-mini S&P. Trading into that weekly fair value gap, institutional order flow entry drill. Market expands higher. Open, low, high, close, bullish week on the previous week. So again, just going to expect that to continue. We have had 1, 2, 3, 4, 5 consecutive bullish expansions. But again, that's fine. I'm not going to stand in front of a freight train and call a top. So looking for higher prices, and look at all the inefficiency here, left open. That's all indicating a market that just wants to keep on reaching higher, right? So by understanding the footprints, by understanding the signatures that the algorithm presents when it's doing its repricing, it's going to help you guys have confidence, right? Have conviction to trust what it is you're looking for. But again, that's just something that's going to come with experience. All right, so daily chart. Last week I left you guys off with as long as you remain above this 2 down close, that bullish order block, as long as you remain above that, I'm bullish, right? So Monday traded down, digging down into the high of that bullish order block perfectly, right? So the levels, again, I'm giving you guys on Sunday before the market starts trading, the algorithm's referring to these levels specifically. Isn't that neat, right? So we hit the high of that daily fair value gap, market expands higher, right? We have that swing high here. So that swing high there's buy stops above that, right? Because why? People are trying to call a top. So Tuesday consolidates further, and then Wednesday they use it to run into that high. And then Friday they just keep taking it higher. So we have here on the daily chart is a daily fair value gap here, and then a down close bullish propulsion candle. So what I'm going to be looking at moving forward on ES is as long as you remain above that daily fair value gap in this down close here, I'm going to remain bullish, right? So I can use that as a target on the downside intraday, as a trade. But longer term projection analysis outlook is going to be bullish. However, we have to remain above these key levels, right? If we start working through that, then I would welcome that, right? Because then that would give me newer information. Then maybe we can look 20, 40, 60 days back and start getting sell side liquidity pools. But again, not getting too far ahead of myself, I'm taking it day by day, and that's what I'm going to be looking at and weighing out moving forward. All right, hourly chart. Looking at, all right, last week's trading. Market expanding, consolidating, expanding, right? So just classic price delivery. What we have here now is, and that's what I want to take our attention to, so this is that daily fair value gap. So we can still work into that daily fair value gap and nothing really change. And that's something I'd be interested in seeing because we have these relative equal lows here and here. So equal lows, that can serve as a downside draw, right? So that's something to consider going into Tuesday and see how they want to use that, right? And again, not calling a top, not saying this market's going lower. I'm still, again, expecting higher prices just because, again, I'm avoiding calling a top. But again, we have sell side relative equal lows here, relative equal lows here, and we have all this inefficiency. So that's something that we could potentially consider going into next week, right? But we just have to see how we open, what the market structure is looking like, and then we'll see if it's poised to go higher or lower at each session, right? So that's the only thing to consider there. And let's try to think, make sure I covered everything I wanted to. Yeah, that should be good. That should be good. All right, so I'll take a few questions, and then I'm going to get on out of here. I got quite a bit to do myself. Private students, I will have the PDF out to you guys today, right? So I'm going to have one PDF out today, and I'll have the other one out for you guys likely tomorrow. I'm doing my best to get that out to you guys. But you guys will have one today, so I'll have that ready for you guys. And then as far as the schedule for this week, I'll have that to you guys as well. All right, I'll take a few questions. Like I said, I'm going to go ahead and get going. Oh, appreciate that, Denisha. Yep. So if you guys scroll to the bottom of the page on our website, you guys can sign up for the newsletter and receive that to your email weekly. Yep. Thank you very much, Denisha. All right, a couple questions on signals. So for results last week, 2 for 3, so two wins and three stop losses, right? But the nice thing about the 3 stop losses is they were consecutive, so the risk was pared back on each consecutive trade. So small red week, slightly under break even, and we keep it moving. Kwame Trades, please hit that like button. Absolutely, please do. Helps us out greatly, and again keeps me motivated to keep giving you guys all this value for free, right? Because I could just do this in Discord, right? But again, doing you guys the favor, getting out here on YouTube for you guys. Adrian, for those of us dealing with the false programming and shorting in the face of the freight train, can't hear, don't call it top enough. Yeah, absolutely, brother. Definitely. We are definitely, we come into this game with a disadvantage, right? With all the programming and garbage that's put into our mind as young fledgling traders. Greetings from Latvia. Hello, hello. Great call on S&P last week. I monitored that and traded NASDAQ. Appreciate that, Ahmed. Yeah, man. Seeing just, again, continuously grinding higher on indices, brother. So got to trade what the market's showing us. Adrian, thanks. Absolutely, brother. All right. Can you take a look at CL? Can you take a look at CL? Yeah, I'll take a look at crude oil. See what crude's doing. Yeah, so not a whole lot going on in the crude monthly chart. Yeah, not a whole lot going on there. So if you're a crude trader, just again be surgical in and out. Daily chart, hourly chart, 15-minute chart, surgical scalps. Just because we're just in a nasty range. If there's a WAR, what will happen to the market? Depends on what market you're talking about. Commodities gonna start flying. So again, just depends on what current what market that you're talking about. So yeah, on crude oil, what I'm looking at, I like these equal lows. I like all the stack sell side here, and I like all the stack sell side. Let me take off adjusted. So there's a lot of stack sell side below the market. And if we go up to a weekly chart, we'll be able to see that further. Right, so there's a lot of stack sell side liquidity here, and that's what I favor a rundown into. But again, we'll have to see what they do. But we've just been in a really nasty range. So a lot of manipulation going on with the crude oil markets because of everything going on in the world. And I'm not going to get too much into that. YouTube will put me in timeout. And I'll take a look at gold. I've been getting a few questions on gold. And let me see USD. And actually, one of my paid students actually was asking me about gold as well. And I want to touch on why I'm not calling gold. And again, let me take on from last year's annotations. That's how long it's been since I've looked at gold, right? So daily chart. I was asked to give price targets on gold when we were trading here at the beginning of January. I remember it was at the beginning of mentorship. One of my students was asking me about what gold's going to do. And I said, there is absolutely nothing I would co-sign gold doing, higher or lower, right? Because there's no draw, right? There's no market structure. There's nothing clean that this market's doing that I can see that's one-sided, right? So what have we done since the 3rd of January, right? Basically nothing. So 40 days of just grinding sideways. In my opinion, there's much better markets to trade, right? Much better markets to trade than gold. So gold is just waiting for that shoe to drop in the other side of the world. And then we'll see gold moving around a whole lot. But again, as for right now, there's nothing going on in the gold market. And if you just want to give your money away, you can just give it to a charity. I wouldn't give it to the gold market. All right, so there's that. Ahmed, thanks, Dylan. Great brief outlook. Notes done. Time to kill the markets. Wishing you a great week ahead. You as well, brother. Take care, Ahmed. The market will dance. Redeemed and yeah, absolutely, Ahmed. It will sure dance. Jay, do you trade one shot, one kill? Absolutely. Yeah, if the opportunity is there, but the opportunity has to be there to swing trade, right? It's not just as simple as, well, I want to trade one shot, one kill, so I'm going to trade one shot, one kill, right? There has to be something that sets up or would constitute a weekly expansion that we can see ahead of time. So if you can see that, that's what I'm doing, one shot, one kill. But as for right now, with the difficulty that we're seeing in the marketplace, I don't have a whole lot of conviction to place behind long-term setup. So it's just a lot of scalping in and out, surgical strikes for me. Great info as usual. Would you prefer monthly or weekly standard deviations or the confluence of both? So it all depends on what you're trading, right? Standard deviations on a 1 minute, are effective if that's the type of trader you are, right? So I can't answer that. Everything is fractal, right? So if it works on a daily chart, it'll work on your monthly chart. It'll work on your 5-minute chart, right? So it's just a matter of taking the information and using it in a way that matches your trading style. Why do you use 1-to-1 R instead of a higher one? Who said I just use 1-to-1 R? All right, guys, so that's about it for me. I'm going to go and get out of here. Appreciate all your guys' lovely questions. Wish I could hang out with you guys all day. Let me just snoop by the Discord, make sure none of the students ask any questions. All right, should be good to go, guys. Let's see any student questions in here. All right, guys, that's going to be it for me then. Have a lovely rest of your Sunday. And for those of you guys that are watching the Super Bowl, enjoy that. And we'll be back to business this week. Good luck and good trading. Take care, everyone. Thank you, Anita. Take care. Bye, guys.